Well, October is well known for its ghosts and goblins, but could this be a haunted month for your investments as well? In this morning's U.S. Bank Economic 360, we talked to Vice President and Senior Portfolio Manager Mike Denneman. He joins Business Watch producer Kelly Leon to talk about whether October really deserves its scary reputation. Mike and Kelly.
Thanks, Peg. Mike, thanks for being here. And you even have, I don't know if our viewers can see it, but you have your Halloween tie on.
Trying to look the part.
It's great. So what is with this reputation for October being scary? Is there truth to that?
Sure. So a lot of investors are superstitious about October and feel that it's a month to be very cautious about. Although I think a lot of that is more rooted in perception and headlines than it is in how the market actually performs. So if we think about the history of the stock market, we have admittedly had a lot of negative events clustered in October. The stock market crash of 1929, Black Monday in 1987, and surely everyone remembers how the market performed in October of 2008. So these significant events kind of get embedded in your mind, and so when you hear October, you tend to think bad occurrences. October, bad market. But again, that's more perception and a bad reputation than it is how the market actually performs. So what are we looking forward to this October? Kind of in keeping with this Halloween theme, I think perhaps we have both some tricks and some treats in store.
So let's start with the good news. What are the treats that we can expect?
Well, the good news is that it's not September anymore, which is statistically one of the worst months of the year for the market. And true to form, this year was no different. Stocks lost 1.5% last month. So we've got that behind us now. And looking at how October does, as I said just a moment ago, it actually is a very good month for the market. And even better, it's the start of the fourth quarter, which historically is the strongest period of the year for the market. So we've got the summer doldrums behind us. We're anticipating some solid earnings reports from companies here in just a few weeks. We've got good unemployment numbers on Friday. So hopefully this gets us past September and we gain some of the momentum that we lost last month.
So we should probably stop right here and move on. But instead, I guess I have to ask you, what are the tricks?
It's not, unfortunately, all good news. Despite what I'm saying to you here this morning, it's been kind of a mixed bag to start October. And I think a lot of that is attributable to what's going on overseas. You know, every day we're getting disappointing news from Hong Kong or Syria or Ukraine. And so certainly those are things to be concerned about. And then here at home, we're just a month away from the midterm election. And historically, stocks have performed very erratically in the weeks leading up to the election. I think with everything that's at stake this year, we should expect no different. But the silver lining is that once you get past the election and the concern and the confusion about what it brings, the market tends to rebound strongly. So I think the message should be, let's see if we can get through the volatility of the next several weeks. Let's look for a bounce in the market after the election is over, and then hopefully we can finish 2014 on a high note. So does October deserve its reputation? Yeah, there's been some scary things in the past, but it's not as haunted as it might seem.
And we have U.S. Bank, you and Jim Russell guiding us through, so we feel very fortunate.
Thank you.
So thanks for being here, Mike.